Hey guys, Justin here. So a lot of you have been asking me to make an update video on Ayro stock, and while there is no big news concerning Ayro stock that has come out lately, I do think that Ayro stock is facing a number of challenges right now that are negatively affecting the stock price. So in this video, I will discuss what those challenges are and where the stock might be headed in the future. But first, if you are not subscribed to the channel, please consider doing that. This channel is growing fast, but I do like interacting with my subscribers in the comment section and making videos like this when you guys request them. So hit that sub button and let's get into it. Before I get into the challenges facing Ayro stock, I want to reiterate some things I said in my last video on Ayro stock. When it comes to Ayro stock, remember that this is a very small company. The market cap is currently sitting around $77 million, and as such, it is a speculative investment. What this means is that there is a high risk of you losing money if you invest in this stock. So when it comes to a stock of Ayro size, I do not hold more than 1% of my portfolio in such a stock, no matter how compelling the growth story is. This is because stocks of this size are not yet established companies, so bad news or extended periods of poor market conditions can sometimes cause these companies to go bankrupt. But if we were to invest in a stock like Apple, for example, we don't have to worry as much because we know that Apple has billions of dollars in savings and will most likely be able to last years without going bankrupt. That is if something serious enough were to happen. But I would say once a stock reaches about a $10 billion market cap, the risk of bankruptcy goes way down. But clearly we are talking about a sliding scale here, so smaller companies will be more susceptible to bankruptcy and larger companies will be less susceptible, generally speaking. So in my opinion, if you have more than 1% of your portfolio currently in Ayro stock, then you should probably sell off the additional shares to get yourself back to that 1% allocation. But if you have a lot of money, say $100,000 for example, you might only have 0.5 or 0.75% of Ayro stock in your portfolio. Now, all of that being said, I think there is a lot to like about Ayro stock. Like I said in my previous videos, Ayro is currently profitable if we exclude operating expenses. And they are the only company making products for the low-speed electric vehicle market, which puts them in a great position. So there is opportunity here with Ayro stock. However, the very small market cap of the stock and the headwinds the company is facing is causing investors to sell right now. Also, since we don't really know how long the sickness affecting the world right now will last, I don't think we can predict where the bottom for this stock will be. If we look at the chart, we can see that the stock has yet to find a bottom. So what this tells me is that the stock could keep falling. Now, when you sell a stock that is falling, you run the risk of selling at a low and missing out on future gains if the stock suddenly rebounds. Good news could come out or the headwinds could go away and the stock might rebound. But in my opinion, I don't think that this is likely to happen because the headwinds are pretty strong right now for Ayro stock and they are heavily affecting Ayro's target market segments. So for me, I decided to recently sell my entire position in Ayro stock. And I did this with the intention of keeping an eye on the stock and buying back the stock at a lower price if it does continue to fall. Now, in order to use the losses to offset gains on my taxes, I would need to wait for 30 days until buying Ayro stock back. But I do feel confident that 30 days from now, the stock will most likely be trading lower. What selling allows you to do is immediately reinvest the remaining money into other stocks that might be going up at the moment. So for me, I had recently bought $730 worth of Ayro stock in July that I recently sold for a $157 loss. This left me with $573 remaining that I then immediately reinvested into my other stocks. Now, all I have to do, like I said, is wait 30 days, and then I will have the option to either buy Ayro stock back or wait a little longer until the worldwide sickness we are experiencing starts going away. So the whole goal here is to limit your losses. Now, if Ayro was a multi-billion-dollar company that was very well established, I might have considered doubling down instead of selling. But the fact that a majority of the other 39 stocks in my portfolio were going up while Ayro was consistently falling was a clear sign to me that it might be better to sell and wait to buy the stock back at a lower price. So I know that there are some people that will tell you never sell a stock for a loss, or that you are a bad investor if you do sell a stock for a loss, but personally I think you have to evaluate each situation independently and make the best decision that you feel the most comfortable with given all of the factors. And sometimes that decision is to cut your losses and sell. So now that we've gotten that out of the way, let's take a look at how the global sickness is affecting Ayro's business model. Anyone who is familiar with Ayro stock knows that they sell low-speed electric vehicles for uses on college campuses, resorts, sports stadiums, and a host of other niche applications. The unfortunate part for Ayro is that these are the businesses that are being hurt the most by what is going on around the world right now. One of the biggest areas that Ayro is banking on to generate sales is on college campuses. In fact, a growing number of college campuses in the US are suspending in-person classes despite many schools only being open for 1 or 2 weeks. This is because college students are naturally social and like to party. So it makes sense that universities are struggling to contain the spread of this sickness right now. Plus, let's be honest, most college freshmen are there because college is fun, and what's the point of being on campus if you can't do anything social? One university, the University of North Carolina at Chapel Hill, canceled in-person classes just 1 week after students arrived, when 135 students tested positive in the first week alone. And keep in mind, UNC at Chapel Hill has an attendance of around 30,000 students. So I think as the semester progresses, a lot of colleges will realize that it just isn't worth it to do all the testing and everything else necessary to keep students safe, and will instead just transition to online learning. Furthermore, as more universities shift to online learning, students at dozens of different schools have started petitions demanding that schools reduce tuition costs. And to me, this makes sense because a portion of tuition costs are fees students pay for the privilege to access things that are only on campus, such as parking, rec centers, dorms, and so on and so forth. But one other thing that most people don't realize about online learning is that you miss out on networking, which is vital to getting jobs once you graduate. These include things like attending on-campus job fairs and meeting other students or professors who might have connections. And when it comes to the most prestigious universities, that's what students are paying for, the networking. Because of this, it's no surprise that enrollment at Harvard, for example, dropped by 20% this year when they refused to reduce their tuition. And in case you are wondering, Harvard costs $50,000 a year, which is a pretty big price to pay for online-only classes. So while it's unclear what effect this is having on enrollment numbers, the uncertainty of what is going on right now will deter universities from investing into things like electric vehicles. Also, while the savings from switching to an all-electric fleet of vehicles is a big incentive, the upfront cost of each Club Car 411 is around 20 grand. So it is a large upfront investment, and many universities will probably elect to delay making that investment until future years. Also keep in mind that sports stadiums and resorts are having a very hard time attracting customers right now. Many different sports are not allowing spectators at all, and resorts are having a hard time because no one is willing to get on an airplane to travel. Now, despite all of this, Ayro is still making sales. And I talked about this in detail in my last video on Ayro, but they recently partnered with Gallery Carts, who ended up buying $584,000 worth of custom-built Club Car 411 trucks. But these trucks are custom-built to address the health concerns going on right now. So this partnership was established in response to the sickness going around the world right now. Something else that is happening that ties together both sports and universities is the NCAA March Madness tournament. The tournament was canceled altogether this year and looks to be questionable for 2021. And this is a big deal because the March Madness basketball tournament rakes in an estimated $1 billion a year, with a big chunk of that going to the schools that make the tournament. But the money doesn't go straight to the schools, it instead goes to the athletic conferences. For example, the ACC earned $30 million for its schools from March Madness in 2015. This is important because this money can be used by the schools for things like upgrading to electric vehicles. Also, teams that make it to the March Madness tournament are also more likely to have big sports stadiums where Ayro's products would be a natural fit. So the schools losing out on millions this year and next year most likely will negatively impact Ayro's sales numbers. So I think you get the point with this. The health concerns are very much so affecting Ayro's ability to sell their vehicles, and it is something that we don't know when it will be over with. So that added uncertainty is not helping Ayro stock at all. Combined with the speculative nature of the stock, it is not surprising that we are seeing the stock price continue to fall. I think Ayro stock will perform in line with travel stocks such as the airlines and cruise stocks, which have continued to fall as well. So my recommendation is to either sell your entire position and wait 30 days to buy back in, or sell off a portion of your Ayro stock to get yourself down to a 1% or less allocation. Now, that being said, I still like Ayro stock a lot over the long term, and I do think it is a stock that is capable of returning outstanding rewards in the future. But over the short term, it is a stock that is facing significant headwinds from the sickness right now, and so it will most likely continue to fall over the short term. So hopefully this video helped you guys understand what is going on here with Ayro stock, and that it also helps you make an informed decision when it comes to your decision on whether to buy, hold, or sell Ayro stock. So let me know what you thought about this video in the comments, and if you liked the video, make sure to hit the like button. And with that, thanks so much for watching, guys, and I'll see you in the next one.